We monitor industrial carbon outputs with rigorous precision, metering grids in real time. But that exactitude disappears when addressing the unmeasured reality of individual commuting. Under the Greenhouse Gas Protocol, employee commuting is classified as Scope 3, Category 7. For service-oriented and office-heavy corporations, the daily transit of their workforce constitutes a material share of their total carbon footprint. To calculate these emissions, the industry standard relies on biannual surveys and data gathered from passive, consumer-grade GPS fitness applications. This creates a fractured foundation for corporate reporting. Subjective surveys hope employees recall their transit habits, while fitness apps generate generalized estimates lacking empirical proof. Organizations force this assumption-based data into strict reporting frameworks, like the SEC climate disclosures and California mandates. Treating unverified behavioral estimates as a hard compliance metric introduces institutional liability, as auditors require mathematical certainty that these estimates cannot provide. The consequences of opaque data extend into healthcare finance and actuarial underwriting. This chart from the Society of Actuaries highlights that reserving is a legal requirement necessary for the accurate valuation of an entity. Injecting unverified wellness data into these actuarial tables introduces volatility, as reserve models cannot project costs based on faith-based claims. This creates the authentication gap, the blind spot between what an individual claims on a survey and what an institutional auditor can mathematically prove. Consumer fitness apps are unable to bridge this gap. Their architecture functions on trust, lacking the multi-factor cryptographic proof necessary to confirm an individual's physical behavior. Capital markets require absolute certainty to operate. Institutions cannot effectively securitize a bond, underwrite a loan, or mitigate risk when relying on an authentication gap. The Dandy Horse engineered a solution to close this gap, secured under U.S. Patent Number 11,998,801B2. Their architecture is called VIDAT, shorthand for verification, inspection, demonstration, analysis, and testing. VIDAT functions as a strict institutional data verification engine, purpose-built for high-stakes reporting rather than personal fitness tracking. Its core function is to transform physical bicycle commuting into a cryptographic, tamper-evident data event. The system operates on rigid failure tolerances, maintaining a false positive rate of less than 0.05% to eliminate spoofing and fraudulent claims. This level of technical verification converts subjective human behavior into objective evidence suitable for a financial audit. Generating an audit-grade record requires a synchronized chain of custody. The VIDAT sequence requires 5 independent layers of proof. Layer 1 is NFC card authentication. At the start of the ride, the system binds the event to a verified institutional identity. Layer 2 is mobile device confirmation, establishing a secondary verification of the user's physical presence. Layer 3 executes hardware tag binding, confirming through integrated NFC or RFID that the registered bicycle frame is in use. Layer 4 deploys telemetry verification. The engine continuously inspects the ride for human pedal cadence and spatial route constraints. If the bicycle is placed in the back of a moving car, the engine identifies the non-bike motion and excludes the data record. Finally, Layer 5 locks the collected data into an immutable record using SHA-256 cryptographic hashing. To protect the integrity of the record, the entire commute is rejected if any single element of this 5-part sequence fails. This multi-factor sequence ensures the physical reality of the commute, providing the confidence required by institutional auditors. Once the commute is proven, the system mathematically measures the exact emissions avoided by the event. Environmental auditors criticize the use of broad national vehicle averages, as applying a single average to a workforce often overestimates carbon savings. The patented VIN-to-Velo methodology serves as a specific alternative to these broad averages. The system decodes the employee's vehicle identification number to map the commute to an exact EPA baseline, such as 600 grams of CO2 per mile for a large SUV. This tailpipe footprint is then contrasted with the metabolic emission factor of cycling, which is calculated at 34 grams per mile. By subtracting the metabolic footprint from the specific tailpipe emissions, the system isolates the granular avoidance delta for that specific trip. This individualized calculation yields the transparent documentation demanded by modern investors and regulators. The VIN-to-Velo protocol turns an abstract environmental concept into a reproducible mathematical reality. Verified VIN-to-Velo data is bundled and structured on corporate ledgers as a distinct financial asset. This asset class is the Bicycle Commuter Carbon Avoidance Credit, or BCCAC. BCCACs satisfy the carbon market standard of additionality because the 5-element chain proves a combustion engine trip was definitively replaced. The modeling is conservative. An average user replacing 1,440 car miles annually generates approximately 0.576 metric tons of verified offset. These individual credits aggregate at a cohort level to offset hundreds of tons for a corporate sustainability portfolio. BCCACs function as audit-grade compliance assets for mandatory SEC climate disclosures and global voluntary carbon markets. The core utility of VIDAT data scales into capital market mechanics and actuarial underwriting. First, verified Scope 3 performance allows corporations to negotiate tighter spreads on sustainability-linked loans. Second, integrating this data improves actuarial precision, which reduces healthcare reserve volatility and increases corporate debt service coverage ratios. Third, municipalities and real estate investment trusts use verified utilization data to generate ESG income and qualify for green bond financing. In the current regulatory environment, strict behavioral verification has evolved into a structural requirement for accurate institutional reporting. Replacing speculative estimates with verified data allows institutions to reallocate capital toward green infrastructure and document human impact with mathematical precision. The Dandy Horse operates on the philosophy to trust but verify. Institutional viewers can connect with the company on LinkedIn to integrate these verification strategies.